In this video, I'm going through the stocks and ETFs in my dividend portfolio that I invest in every week and how much I actually put into each holding. Then, at the end, I'll break down the statistics and income that this portfolio generates for me. Hi guys, I'm Harry and welcome to my channel. So dividend investing is a long-term approach to wealth building. It is where you invest in several companies that choose to pay a dividend to shareholders and then reinvest that money back into the stock market. It's a long-term approach which starts off fairly slow but then exponentially provides greater returns as the years go by, as the dividend snowball effect starts to take place. Dividend investing is the basis of my long-term strategy, with the goal of achieving financial independence as young as possible as part of the FIRE movement. Now, there is so much more to say about all these topics, but I don't want this video to go on forever, so I will save it for future videos. If you don't want to miss these videos when they come out, or you're interested in other financial videos, then please do hit that subscribe button. So every single week, I invest £200 into my dividend portfolio, averaging into the market. If you're wondering why I'm trickling my money into the market, rather than just investing it all at once, then check out my last video where I will explain. It will be linked at the end of the video. I'll start with my favourite dividend company, Legal & General. Now, Legal & General is a very large financial services and asset management company based in the UK. It has multiple revenue streams from the differing parts of its business, such as lifetime mortgages, pensions, annuities, investment management, and many more. I invest £15 a week into Legal & General stock, which currently has a huge dividend yield of 6.51%, meaning for every £100 invested in the stock, £6.51 will be paid back as a dividend each year. This means that each week my annual dividend income increases by 47p. Normally, as a dividend investor, you would be wary of such a high yield, as it usually indicates that a dividend cut is imminent. However, I think Legal & General is safe. The company's payout ratio, which is the proportion of earnings paid out as dividends, is usually around 50%, which means their earnings can halve and still be able to maintain the dividend payment, which is a good sign. Also, management have demonstrated that they are very investor focused and keen on maintaining their dividend record. This was demonstrated perfectly during 2020, when the Bank of England advised all financial services firms in the UK to suspend their dividend, which practically all of them immediately did, except for Legal & General, which continued with the scheduled dividends, paying over £1 billion to shareholders for the year. Legal & General deserves its own video on it, explaining why I think it's the best dividend stock currently and what I think about the future. Their 2020 annual report gets released on the 10th of March, so after analysing that, I will make a video. Now onto the next stock. Realty Income, which I invest £10 in every week. Realty Income is a real estate investment trust that operates commercial properties mainly in the United States. You will struggle to find a company with management that care about paying dividends more than the management at Realty Income. The company was set up with the main goal to provide shareholders with a regular, consistent income. Realty Income pays a dividend every single month and have currently paid 607 consecutive monthly dividends, which have increased at an annualized rate of 4.4% per year. The company loves paying dividends, so much that they've trademarked the phrase, the monthly dividend company. The regular dividend payment is actually a huge bonus in my view. As America's first billionaire, John D. Rockefeller said, "Do you know the only thing that gives me pleasure is to see dividends coming in?" Rockefeller hits the nail on the head here. There's no better feeling than getting a notification on your phone that a new dividend payment has arrived in your account. So as a Realty Income shareholder, I will be happy at least once a month. Now onto the ETFs. And what better way to start than with the one that has the largest weighting, with £45 being invested every week into the WisdomTree Global Developed Quality Dividend Growth ETF. This ETF doesn't pay a dividend as it's an accumulating ETF, which means all dividends paid by the companies held within the ETF just automatically get reinvested, causing the value of the ETF to increase. The ETF passively chooses companies to invest in based on their quality and momentum, whether they pass WisdomTree's ESG criteria, liquidity, and whether they pay a dividend. The top 600 companies from the developed market only are then added to the index and weighted based on the previous year's dividend payment, with companies who pay more dividends being more heavily weighted. The dividend measurement is the company as a whole, not at a yield or a per share basis. This means that tech is the dominant sector for this ETF due to the exceptionally high dividend payouts from companies such as Microsoft and Apple, who pay out many billions each year to shareholders. This tech exposure is important as the remaining ETFs don't have much, and it's important to be exposed to all sectors for diversification. Next is the SPDR UK Dividend Aristocrats ETF. This ETF passively tracks the 40 highest dividend yielding UK companies that have at least 7 consecutive years of stable or increasing dividends. Due to the numerous companies having to cut or suspend dividends in recent years, there are only 35 companies that are eligible to be part of the ETF. It is weighted based on yield and so has a high yield of 3.28% itself, providing me with an additional 49p of passive income per year from my weekly £15 investment. The fund has a massive exposure to the financial sectors, but that's hardly surprising as the UK markets are dominated by financial services. Then onto my second favourite ETF, the US Dividend Aristocrats ETF. I invest £35 a week into the ETF, adding roughly 77p to my annual income. The index tracks US companies that have increased dividends every year for at least 20 consecutive years, and is weighted based on their dividend yield. This means, as well as a growing dividend, the ETF will have a growing capital value as stocks tend to rise when the dividend does. The sector breakdown is similar to the UK, except more even. Then onto the Euro Dividend Aristocrats, which is made up of the 40 highest yielding Eurozone companies that have had stable or increasing dividend payments for at least 10 consecutive years. I invest £35 every week here, adding £1.6p to my dividend income. This ETF is great for exposure to the German and French markets, especially for the utility sector, which is famously great for dividends. And finally, from SPDR, the Pan Asia Dividend Aristocrats, which tracks companies that have increased their dividend every year for at least 7 years in Asia. My £15 weekly investment here provides an additional 41p in income. The management fee is relatively high at 0.55%, however, the ETF offers great exposure to land development and real estate companies, so it's crucial for the portfolio. Almost 25% of the ETF's weighting is in Chinese companies, where there are great growth prospects. And finally is the Vanguard All-World High Dividend Yield ETF. This tracks around 1,500 of the highest yielding companies from developed and emerging markets, weighting them through a combination of market cap size and yield. I pay £15 a week into the ETF, which yields currently at 2.9%. From the 6 ETFs in my portfolio alone, it gives me exposure to 2,061 unique companies and provides a yield of 1.98%. This yield doesn't seem that high, which is due to over a quarter of the £160 invested into the ETFs going into GGRG, which doesn't distribute any dividend. Adding the 2 individual stocks, Legal & General and Realty Income, brings the yield up to 2.49%, providing me with an extra £4.61p in dividend income every week from a £185 investment. This portfolio has a large exposure to financials and real estate, which are great dividend-paying sectors and have a positive future. However, this portfolio wouldn't have fared too well during 2008. Now, I debated whether to include the final ETF in the video, as it's not really a traditional dividend investment, but I will include it as I invest in it as part of the portfolio, and it does pay a dividend. It's the classic S&P 500 ETF, tracking the 500 largest profitable companies in the United States. The yield is low at 1.26%, but the dividend payout does grow quickly along with the value. The S&P 500 is famously dominated by large cap tech stocks, so its addition helps bring my overall portfolio exposure to tech a lot higher, which is good for growth. So every week I invest £200 into this portfolio, which increases my annual passive income by £4.80p. The way I see it is every week of investing, my portfolio is able to buy me one more lunch every year. Maintaining this investment schedule all year will lead to £10,400 invested in the portfolio and £250 of passive income. Hardly a life-changing amount of money, but dividend investing is my long-term strategy, As each year goes by and I invest more in the market and dividend payouts increase, my passive income and yield on cost for the portfolio will exponentially start increasing too. Thanks guys for making it to the end. If you appreciate me sharing my portfolio, please do hit the like button. Enjoy the rest of your day.